The basic story, I think, of how this was handled is what I call the emergence of a stronger discipline union, namely tougher rules on the way individual countries behave, designed to prevent the emergence of these sorts of imbalances in the first place, combined with a much more aggressive, a much more positive central bank than anyone imagined could emerge in the Eurozone context. The ECB under Mario Draghi has really ceased to be the Bundesbank. That's really quite important, and I think that's the only reason they got through this at all. If it hadn't been for the ECB in 2012 with its outright monetary transactions, the whatever it takes program, and the QE, I think they would now be in really, really desperate trouble. So that's basically what they have got. What they have failed to provide, and that's the first really big failure, follows from what I said, is a system that generates to a degree automatically, either through economic or other processes, it would be a mixture of economic, endogenous economic processes and policy change, what I call an adjustment union. Adjustment on the macroeconomic side has been externalized. Demand has been shifted from internal to the rest of the world. The third thing that they could have done, and they made a bit of a move towards, is what I call a private insurance union. What I mean by this is that it's a logic of the Eurozone as an entity, is that it would have an integration of the financial sector and the capital markets such that if one part of the place got into trouble, the risks were quite widely shared among the population as a whole through the financial sector. So if, for example, just to give you one example, most of the capital flows in the European Union inside the Eurozone had occurred through equity, right, rather than debt, then automatically when Spain had a huge crisis, there will be capital losses in the equity markets. You can't, you don't have a fixed claim. The claim automatically adjusts to the value of the assets on which you have a claim. This is a, if you like, the best form of private insurance union. It's a risk-sharing process. Similarly, with debt, you could imagine instead of conventional government bonds, you have GDP-linked bonds, something which adjusts automatically to when there's a recession. In the beginning of this crisis, there were next to no such private insurance arrangements in the system. I mean, I can't go into the detail, but everything ended up in the debt markets, above all banks were central, and of course, as soon as that happened, the banks started looking terribly vulnerable. So obviously a big question, has that changed? And I would say it's changed a very little. We still don't have a Eurozone integrated banking system in any way, and very little of the capital flow, even now, it comes via equities. The fourth possibility is that they would really increase the degree of public insurance, fiscal mechanisms of the type that you're familiar with in the United States, automatic fiscal mechanisms which compensate people for huge recessions. Essentially nothing of this kind has occurred at all, next to nothing. There is tremendous resistance, I think no sign so far of willingness, above all in the credit-worthy nations, to create a genuine fiscal union. So that seems to be off the table. So what we've got is, I think, a stronger set of institutions than before, but very far from what we would think are likely to allow the Eurozone to cope with the next crisis. Very much better than last time. I think a little better, but not very much better. So my concerns about the long-run stability of the Eurozone remain, particularly in the context of the sorts of pressures we've seen before. So what I would say is cyclical recovery. They got through the crisis so far, more or less, largely because of the central bank and a tremendous willingness to bear pain, but this has not yet been reformed sufficiently, for me at least, to feel confident that it can cope with the next shocks, whatever they are, vastly better than it did last time. And that's worrying because the Eurozone is today still the second largest economy in the world, just after the United States. It's bigger than China, though obviously that might not continue forever. and it is an enormously important player in the world economy, taken as a whole, the Eurozone as a whole, and of course in the West.